Welcome to Quantum Finance. My name is Parker. I'm the head trader here, but I am not a financial advisor and this is not financial advice. So in today's video, we'll take a look at the economic data, we'll go over some news, then we'll do a market recap, and then we'll look at the trading opportunities from today. So starting here on the economic data front, we did have the U.S. Services Purchasing Managers Index here, the PMI come in at 53.7, beating the expectations here of 51.5. And turning to the calendar, we will look at next week, see what we got coming up. So Tuesday, we have consumer confidence and new home sales. On Wednesday, we get core durable good orders and crude oil inventories. Thursday, we get GDP, initial jobless claims, and pending home sales. And Friday, we get the core PCE price index. So now we can look at the significant earnings that we had today. We had Procter & Gamble, Schlumberger, Regions Financial, and Signature Bank. Now we can look at some news here. This is March marking the 12th consecutive monthly decline for the leading economic indicators, which has only been reached and or exceeded during recessions. That started in 1973, 1980, and 2007. So the last time the LEIs hit the 12-month mark was March of 2008, which was when Bear Stearns collapsed and the Great Financial Crisis happened. And so we also did get a new mortgage fee structure, which is just mind-boggling. None of this makes any sense, but welcome to 2023, right? So if you have a bad credit score, you get a 1.75% fee discount on your mortgage. But if you have a good credit score, you have to pay an extra 1% fee on the mortgages. So yeah, this makes absolutely no sense. I'm just gonna leave that here because I don't really understand what's going on there. And we also have $100 million worth of gold stolen from Canada's largest airport. And this is just a chart of the Fed here showing the total public debt. I always like to just throw in the charts from the Fed here showing the debt, just because it's really insane where we're at. As you can see, in 1980, debt to GDP was 26%, and currently in 2023, we're looking at about 123%. So as you can see, just the parabolic rise in debt to GDP here. And this is the spread between a 3-month and the 1-month Treasury yields, reaching a high of here at 1.72%, which is currently the highest it's ever been. And this is the warn notice right here, showing from companies that, a warn notice is like before a large company like fires a bunch of people, they have to warn them. And now you can see the trend here. It is currently picking up. And we have the first ever U.S. nuclear powered Bitcoin mining plant announcing full deployment of its miners. And we also have 23 states working on legislation to establish alternatives to the U.S. dollar as legal tender. So now we'll do a market recap here, starting in the debt market, looking at the U.S. 10-year yield. We do have a green day here in the 10-year yield after bouncing off that midline. Still battling with this midline here on the weekly chart. Sorry, we'll look at the dollar. Now we'll look at the dollar here. As you can see, red day. Getting another wick off that midline, looking like it wants to roll back down here towards this lower extreme here after getting rejected off this midline like 3 or 4 times here. Stock market, we do have, kind of like a hammer tail day. Slightly green across the board. Not much action today, though. Now look at crypto. Bitcoin, we do have another big red day here, getting its continuation to the downside, making its way down here towards this lower daily extreme. And XRP, we do have another big red day here on XRP, currently down 6.4%. And if you remember yesterday's video, I was talking about this 43-cent level that could be a potential target here because it is this previous high and this weekly EMA lining up here. So, and we're getting pretty close to that level. Now we'll look at commodities, starting here in oil. We do have a green day here after wicking off of that midline, getting pretty close to filling this gap here. Gold, we do have a red day here in gold too, making its way down through that midline. It's pretty squeezed here on the daily chart, getting a pretty large wick here on the monthly chart. Silver, we do have a red day here in silver. Nothing much here to talk about. We just have consolidation up here at the upper end of this daily range. So now we'll look at the trading opportunities, starting with our volume analysis here on the S&P 500. As you can see, pretty average volume day like we got yesterday, reaching this vol average. Majority buying today, as you can see with this big hammer tail wick up to the upside here. Now we can look at the 5-minute chart. So it was a fairly large volume day with a lot of buying, but as you could see, I mean, it really did nothing all day. We opened up here, pulled down into yesterday's lows, and then we just chopped below between the open and yesterday's lows pretty much most of the day, peaking above it here about 2 o'clock, and closing pretty much right there where we opened at. So pretty boring day again today. The action in the market has just been pretty bad recently. Yeah, I mean, this range we've been in that we've been talking about, this broadening wedge here, we did hold support. I remember in yesterday's video I was talking if we did squeeze to the downside here, we would look for, a move down to this level around here, this 407, 408 level. But as you can see, we did hold that lower extreme here on the 2-hour chart, and we did hold that lower trend line. So, I mean, yeah, we do have downward momentum here on the 2-hour. We are starting to revert here a little bit back to the upside here on the 1-hour momentum, but as you can see, still just in this choppy wedge we've been in for quite some time now. All the price action through here has just made for really bad trading, to be honest. I mean, there's been a couple good trades, but I mean, it's been a struggle compared to the past, couple months. We've had a lot of action, and this range we've been in, I'm just really excited for us to break out of this range and get some more direction here instead of just bouncing around. But when it comes to the trades, I mean, like yesterday I said there was no trades that I liked. I mean, same thing today. I mean, there was just, I mean, this price action in the SPY that bust all the charts for any big options trades. We can scan through here real quick. I didn't like any of the Procter and Gamble kind of had a setup. As you see, it's got this big gap up here off earnings, pullback, consolidation, squeeze here, but I mean, you can look at the 15-minute. You see it got its 15-minute cross up here. Didn't even quite cross, but then as you can see, just failed. But this was just a volume thing. I mean, it got its nice poke up here in volume, and then, basically just no volume the rest of the day. So, yeah, this was like the only type of decent larger cap move, but this was not even good because the volume was so bad. We can kind of scan through here. As you can see, I mean, Amazon had a nice day getting up here and having a nice bounce off its 200-day moving average, but, not the best setup with the momentum, and it's not the best setup with the squeeze. And, this 15-minute trade line, didn't really ever touch it. So Amazon did have a nice move here, but, not the best chart. Yeah, I mean, there was just really no good moves today. You can just see there's a lot of chop and like non-directional type plays today. So yeah, not really much to talk about on the trading front. I mean, being in this range that we're in the SPY, we really don't have a direction here. We are just kind of chopping around. So, I've been, when the SPY is like this, when the overall market is just in a chop fest, not really, having a really good direction to one side or the other, you want to, kind of back off a little bit, not put on too much size, not put on too much risk, and then, wait for the breakout. Like, wait for this to start breaking down to the downside here, before you start putting on a lot more risk and taking bigger positions, because still, this is still just chopping around in this range, right? Or wait till we get a squeeze to the upside, right? Wait till this squeeze plays out and we get some type of direction and we're not just in this super choppy range before we really start putting on size, because, you could have really got chopped up, throughout all this price action here on the S&P 500. But yeah, not really anything I want to talk about today. The only thing that was even stood out to me was that Amazon, having a nice push up there through its 200-day moving average. And we can look at the Amazon chart while we're at it. As you can see, Amazon on the weekly chart here getting a squeeze to the upside, really bouncing off that midline here. And as you can see, just getting a nice kind of breakout day today. But not really getting too much of a close here, getting a pretty big wick to the downside. But yeah, I think that'll do it for the video. Not too much I really want to talk about today. The market has really been pretty boring recently. Not really any good opportunities. It's been kind of just sitting on my hands and waiting for some type of catalyst to take to really hit here in the overall markets or the economy or just anything. Just ready to waiting for the market to break out of this range that we've been in. And hopefully we will get that next week. So appreciate y'all watching the video, and I will talk to y'all later.